Hello traders, this is Rich Derrick from tradesight. Wanted to take a moment and take a look at the weekly sentiment survey from AAII. Back on November 15th, I believe it was, I put up a video and we talked about how the sentiment survey results at that time were pointing for reversal back to the upside in the market because of a very, very large number of bears and a very, very small number of bulls. As we talked about in that video, the sentiment survey is a contraindicator, which moves in the opposite direction of the of what's going to be the dominant market trend. Here in the most recent reading, you can see that we've got a very, very large number of bulls. We've gone from that very, very large number of bears, which was reading about 48% just a little over 5 weeks ago. Now we've really just quickly returned past the mean and entered into a climatically overdone condition in the opposite side. We were up to 46% bulls, 28% bears, 28% neutral, and 25% or so bears. So we've got a very, very large number of people in the bull camp. The bear camp is really, really skinny at 24.8, and we had a pretty large jump just in this last week's readings from the bear camp, which lost 5%, and most of them actually went to the bull camp. We did have a few of them drop off here into the neutral rather than going directly from the bear camp right up to the bull camp. The only thing is, I would feel a little bit better about this being the climactic reading for the turn down here. If we had just a few less in the neutral column. Usually when you have that very, very low reading of bears and a low reading in neutral, that means everybody's got an opinion, everybody's in the bull camp. However, I do think you need to take this into context with the climactic put call reading that we got exactly 1 week ago, and also the very, very overbought 10-day trend that we talked about in a previous video. So if you put all these three things together, it really spells trouble for the bulls, and it's going to make upside in the market not the path of least resistance. In fact, downside in the market right now with the oversold condition, the sentiment survey results, and that climactic put call reading, that really makes the case for the path of least resistance being lower. We've got this big break in the market today. We're coming into the close here. Market's down 17 handles on the ES side with gaps overhead. So keep an eye on this. Make sure that you kind of keep this penciled on the margin, and that you don't ignore this for trading in the coming week or two. As always, if you have any questions, feel free to stop by the Trading Lab, where you can ask the analysts questions real time. And thanks for listening. And again, this is Rich Derrick from tradesight.